Hello, hello, and welcome back to Trading Weekly. 2 hours earlier today because I have obligations a bit later on. How you doing, Kaye?
I'm doing great. Happy Sunday to everybody. I know folks might be going to the beach today, but it might rain as well. So, just stay safe and stay dry.
Well, I'm not sure why you go to the beach if it was raining, Kaye, but yeah, I guess there's some crazy people out there. Although saying that I live by a beach down here, so yeah, we definitely see a few people go out there and swimming. Not too sure why you would do that. Of course, we're just a couple of guys on the internet looking at charts, giving our perspectives on certain things as well, which you can see down the bottom there. Put your ticker requests in the comments if you want to have anything looked at. We'll give our thoughts, feelings, kind of our technical analysis, maybe the thoughts on the actual company itself. And of course, our perspectives for potentially the future of that company. Massive thank you to Wolf as well for letting us use the platform. We really, really appreciate it. And I think that's about it. What have we got? Yeah, audience requests, and subscribe as well to the YouTube channel, which is Trading Weekly, not Trading Triangle, because we have changed recently. So it is at Trading Weekly, as you can see there down the bottom on the screen. How was your trading this week, Kaye? Was it good?
The trading went well. I think the Tesla trade that we kind of talked about last week, Tesla actually did blow up on the earnings, on the bad side, but they recovered the next day.
They
So
did.
that's an interesting part. So we can talk about more if we get few requests, we can touch upon the Tesla chart as well. But I think overall it was a good week. This is going to be the massive week, I believe, it's because a lot more Max 7 are reporting earnings. So massive week this was from an earnings standpoint.
Yeah, I did take a few shares going into the Tesla earnings, I must admit, and obviously to the upside, and I did get burnt the next day. It wasn't massive. It was a very small portion of my portfolio. Of course, it's a gamble. It's a binary event, as you've mentioned many, many times on these sessions. Unfortunately, it didn't turn out the way I wanted it to. Cut the shares, and the next day straight back up. So that's how it goes. Sometimes that's trading. You've got to take these losses and move on to the next opportunity. But like I said, I was not really hoping for big money from that. It was more kind of pocket money. But it does happen. That was how kind of my trading went all week, really. Very choppy week, wasn't it? I don't know.
It is choppy, yeah.
Intraday markets are very, very choppy. Didn't work out perfectly for me, but of course we move on to next week and hope for better things. Still in the game, still ready to go. Looking forward to it. Obviously, risk management was a massive part of that. So yeah, should we jump into the slideshow, okay?
Let's do this.
Okay, so of course we are looking at the week of the July 28th to August 1st. Fantastic. August already. Wow. They've changed the...
Didn't we just start the year?
I know. It feels like that, doesn't it? We're already in the third quarter. Wow.
Oh, my God.
Yeah. So obviously we do have last week's performance here up on the screen. We've got NVIDIA, Microsoft, Apple, all kind of trading a little bit flat. Actually, Tesla on the week was only 2% down, which felt like it could have been a lot worse. And of course, we do have Amazon on the screen here, up 3% ahead of their earnings this Thursday, I believe.
Yeah.
We'll take a look at the earnings just shortly. Anything else you punching off the screen here for you?
No, nothing specific. I mean, NVIDIA, the reason it was flat because it's pretty much, trading at its all-time high right now. So it's probably trying to consolidate, figure it out the direction. The earnings will be in a couple of weeks. But again, I think also the reason is they are probably waiting to see how the hyperscalers are, spending their money. Are they buying more chips and stuff like that? If that is going to be the case, then yes, I think you will see probably a little bit more rally going into NVIDIA's earning along with some other semiconductor. However, Intel last week, actually, they did drop right after the earnings reported. It was a pretty big drop. They were trading around the 2266. Now they're trading at 2070. So that was a big drop on Intel. I don't know if I would initiate a position. I probably would prefer Intel maybe in the high teens, I would say, like 15, 16. That would be my...
Yeah, I mean, it's trading within a range at the moment, isn't it? Maybe we can put that on our list, because not too sure we're going to get too many ticker requests today, obviously with the time change being a bit different. Changing with people's kind of schedules, we're messing around with their heads. But maybe we can stick that one down. We can have a look at that a bit later on.
I did.
One thing here is AMD down in the bottom left corner here, 4%. So at least one semiconductor stock is kind of still taking off. Again, what a revival that stock has had. AMD was down in the depths of $70 to $80 or something like that. And now it's right back up to kind of 140, I think it is. I can't really remember what it even is at.
It is 66.47.
Wow, yeah. So that's performance for last week. We'll move on to the next slide, of course, which is the fear and greed index, as always. So the greed, we're still sitting at 74. The week before, we were sitting at 74. I think the week before that, we were sitting at 73. So we've been pretty flat for 3 weeks now. We're not quite ticking over into extreme greed. Although the charts might say otherwise, so the SPY and QQQ just keep plugging upwards. I think there might be room for another push upwards, like a push into extreme greed. Maybe we get up to kind of 80, 90, and then we'll start seeing some target profits. But we'll talk about that when we get the charts up for the SPY and QQQ. Obviously, you can see the performance last week for SPY 1.22 and QQQ 0.46, so a fairly flat week. Do you want to talk to the put call, the fix, and the key events there?
Yeah, so the put to call again, keeps showing it's very bullish 0.65. It's been hovering around 0.65, 0.7. That's generally how the standard the put to call ratio is during a bull market. And VIX dropping to 1493 just keeps showing us that there's less volatility. So if you are looking to buy VIX calls and stuff like that, I would still hold on to see if we can get the little bit more drop in the water. You could play VIX by buying calls, but sometimes it's not a good idea because VIX moves pretty fast, and you might, the trade might not go in your direction. So that's one of the techniques we used at least last year, where VIX would fall to 15 and we would just buy calls and profit from it. But that has to be pretty short term. Key events, massive earnings. You will see in the next slide how many companies are reporting earnings, the big ones. And then we have the Jerome Powell on the interest rate next week.
Always a big event. Just be careful when you're trading around that sort of area because it does get choppy very, very quickly. You mentioned about earnings, and let's move on to the next slide. And we do have a lot of earnings. It's hard to know where to even start. We'll start with your kind of chart that you've got today, and that's SoFi before market open on Tuesday. Big kind of company that lots of FinTwit kind of look at, and obviously the big investors as well. They do like SoFi alongside PayPal. Obviously, we've got the big names as well: Meta, Microsoft, Apple, and Amazon. 4 of the Mag 7, should we say? And then a few kind of fan favorites with Robinhood, Coinbase, even Reddit is now kind of in that kind of. Any other names that you're kind of seeing on the screen here that people might?
Yeah, so on Tuesday you have United Health Group, another big name.
Oh yes,
Boeing,
of course, yeah.
You have Spotify, you have Visa, Starbucks the same day. I know there are a lot of people who are now looking into Cheesecake Factory, but I'm not a big fan of those kind of stocks. Moving on, you have Lam Research, Qualcomm reporting earnings, ARM reporting earnings. It's just crazy. Then you have the following day, you have MicroStrategy. I know you used to cover MicroStrategy a lot. Are you going to be doing earnings call on that?
I'm in the earnings call on my channel, as always.
Okay. Yeah, I might pull off earnings this week. I'll see how my schedule works out. And then on Friday you have the two Exxon and Chevron reporting earnings as well. Now specifically, I'm watching United Health Group this time around, and I don't know if I will initiate a position before the earnings. Maybe just wait to see how it reports. By the way, for those folks who are interested in United Health Group, just so you know, the earnings call will start about 45 minutes early. So I think they're starting at 8 a.m. East Coast time, EST, for the right before the opening bell. So keep that in mind. And I think they'll probably take a lot more questions this time around on the earnings call. So
yeah, I'm sure they will with everything going on. So it's going to be an interesting call for United Health Group on Tuesday before market open. You'll probably see the call maybe an hour before open-ish, maybe slightly earlier than that. So if you are interested in that, there's loads of YouTube channels actually at the moment that do just earnings calls, which is quite good. All you have to do is search the company and the earnings. It will pop straight up for you probably a few hours after the call. A few more names worth mentioning. We've got Enovix, which is a battery type company that people seem to like. Etsy, ARM as well, obviously Ford, which is kind of plateaued slightly at the moment, and Roku, which is currently what we were hiding with our kind of screens on there. I don't know how to really explain that, but
and Cloudflare right above that.
Yeah, exactly, Cloudflare as well. So it's going to be a very, very busy week for people's portfolios, but potentially a very emotional week for some people as well. But for the next slide, obviously make sure you put your tip requests in the comments. We'll probably about 10 minutes or so through our picks of the week and SPY and QQQ, and then we'll take a look at those. If we don't get, which I'm expecting, we don't get too many tickets today because once again we have changed time. Then we'll just go through some bigger names, and we'll cover what we can in that space of time. We'll move on to the next slide, which is our past performance. Once again, I win, but not in a very emphatic only because you took Tesla, which was unfortunately -6% down in the last 5 trading days. And obviously RBRK for me was down 2.4%, which, a point for me. Anything to say here, Kaye? Or are you going to have bigger things this week?
Well, I don't know at this point. You have just been on a massive winning spree, so I'll leave it that.
Well, we'll see what happens this week ahead, because you've got SoFi and I've got again, just because not to how I wanted it to yet. But we'll cover those stocks in a second. We move on to the next, which I believe is our first day. Let me just sort out the screen so people can see a bit better. Get rid of that as well. Our first chart of the day is SPY, as always. We do have a actually. What's your take on IXHL with the imminent phase 2 results? I have no idea what that stock is, but we'll stick it on the list and we'll have a look at that a little bit later on. So do stay tuned. Q Casmit, if that's how you pronounce that word. Name, sorry. So yeah, we've got the first one on the screen here, which is SPY. Again, I've got the gaps kind of covered as we covered last week on the stream. But I've actually added the RSI onto this one. And we are just kind of teetering into the overbought section, which for me is the 75 mark. You should be able to just see it above our faces there. And you can, at the beginning parts of April, we came all the way down to about 25, maybe 23. And we got bought back up. Obviously, it was a very emotional market back then, but generally, we got bought back up. So I've been looking at the RSI, see if it gets up to kind of 80-ish. If we get a little bit frothy, I'll be looking to kind of be a bit wary of my stocks, maybe take a bit more profits off of my long-term positions, or swing trade positions, should I say, and then just be a bit more hesitant to where we're going in the future. I've spoken enough now. What were your thoughts on SPY and the market maybe overall?
No, I think you hit all the main points. And I think one thing that you mentioned, that since the market is already at its all-time high, you should be looking at your from a risk management standpoint and taking profits on your swing trades and the swing positions, and not necessarily initiate new positions at all-time high. And the reason is because there are a lot of gaps, and you can see these gaps on the chart itself, that there will be some sort of a pullback, and that's where you should be looking at initiating new positions. These companies, even run up a lot, they are due for a pullback at some point in time, and that's when you should drink those at all-time highs. It could make it can keep going up, but the fundamentals will not be supporting those as well.
Yeah, exactly right. Just be careful where you are in your trades, and perhaps your research into kind of where you should be and where you shouldn't be selling, like buying, selling, etc. And that doesn't sound very helpful, but Kaye, you mentioned basically everything I'll touch on there. So that's the SPY. We move on to Q, which is very similar. Obviously, with the SPY, we've got a few gaps below, which is essentially maybe like 5-10%. And I've kind of played out a little scenario here for QQQ if we were to get a bit of downside. And it's just basically to the previous all-time highs set back in, just before the turn of the year and March as well, or February, March. Maybe we just come back down there to retest that area if we do get a bit of downside, which is 4%, which I think is fairly reasonable. And obviously a big gap down here as well, which I guess will eventually be filled. Personally, from a personal point of view, down to 490, which is about 10-15%. You'll probably have the figures there.
Yeah.
But it's definitely a possible scenario if we do get a bit of a downturn, because we're not going to go up forever. Over the long course, obviously next 10, what happens, I'm not saying it will happen, but generally what happens is we do generally go up year on year. But through the years, you do get 5, 10, 15% corrections. So just be wary of that.
That's
we've essentially only had one of those this year, and that's fair enough. It was a big one, but we've only had one correction. We normally have about 3 to 5.
Yeah.
So just be careful.
That's the 13% pullback to that level.
Okay. Yeah. And just another thing as well. I mean, seasonality. So people going on holiday. Obviously, it's August, September. The kids are off. People are going away on holiday, maybe taking some profits, etc. So just be careful with August and September. Didn't you say last week that August was typically a performing month.
Yeah. So among all the months, August and September are generally the poorer months. July is the second best month, and you can look up this data on S&P 500. There are many websites that will tell you. So July is the second best month after November. Generally, people think that the December leads to the Santa rally, but actually November is the month that actually gives you the biggest bang for your buck, and followed by July.
But again, that could be a kind of a human psychology thing as well. Like December, maybe people taking profits to buy presents, get ready for Christmas, set themselves up. Like even just
I mean,
taking the money out of the market type thing.
Yeah, if you think about it, right, December is the only time left for portfolio rebalancing. So a lot of people, they do sell stocks to get the tax loss harvesting. So there's a lot going on in December. That's the end of the fourth quarter, and they have to get ready for the tax season. So that's why a lot of selling happens, portfolio rebalancing happens, tax loss harvesting happens. We all do it. And if you're not doing it, then you should definitely learn how to do tax loss harvesting.
Exactly right. You heard it first. You can just search that on YouTube, pretty much, kind of tax loss harvesting, and you can learn all about it. Okay, so we'll move on from QQQ then. We'll go on to my first chart of the week, my only chart of the week, which is RBRK once again. I mentioned, obviously, on the left side, we'll start with the fundamentals. I mentioned it last week as it was my pick last week. Revenue consistently going upwards. And of course, cash and debts as well looking pretty good. Staying flat, cash is going up. And bonds are kind of staying flat as well, which is not too bad. All of this can be found on visualstocks.com. It's a good kind of platform. It just makes everything look good pretty much when you're looking at fundamentals. Now, I put this on the screen this week, which is a falling wedge pattern. I know you're a fan of kind of patterns, and although you don't look for them too much as I do, but I know you're a fan of patterns. And this one is basically simply, we have really good price action coming into here, make a high, and we basically make lower highs and lower lows, but in a formation of almost like a flag. It's basically a bull flag. And then we're just looking for the pop out. And essentially that's what I'm looking for with RBRK. This time last week we were up here. So we've come down a little bit, but we have maintained this pattern, which makes me think it's getting stronger. So I'm looking for a break here, primarily with volume, and then basically just playing it back up to 102. The most recent high is, of course, if it goes higher than that, then brilliant, I'll keep half my position. But from here to there, I probably should have done the actual estimation, but from here to there is, it's well over 10%.
I can do that for you.
Yeah. It's about 16%, I think, off the top of my head. So there's definitely a possibility to have this one run. Management, we must be careful with it, and we must have a stop loss. My stop loss would probably be around about 80. Not right underwards, because obviously you can punch down and make a, go a bit high after that. 80 is a fairly safe place. Maybe if you're looking for a little bit more risk, then maybe 70.
So it's about 21% approximately.
21%, even better. Wow, yeah. But obviously I'll be looking for the break before that, so it might be a little bit less on the percentage wise. But either way, that's a pretty good move for a swing trade. Be looking for about 2 to 3 weeks. And I know earnings is coming up on September the 13th, I think, off the top of my head. We've got a long way, basically got a month to earnings, so there's still plenty of time to
September 4th September.
4th September, okay, not too bad. That's all right. So what are your thoughts on this one, Kaye?
Let me ask you a question on the falling wedge pattern. So do you think that it will actually get to the apex of that triangle and not actually have a breakout? So what I mean is, like, it will kind of fill this and have a breakout. Do you see that often, or you sometimes this just breaks out right before it reaches the apex?
So no, you don't see it that often, and sometimes you see it break out even here-ish. Obviously, you don't know it's halfway at this point because it hasn't really formed at this point. But if we get tighter and tighter, it means that the move is got to be more explosive, more violent. It could be to the downside, of course, and that's where the stop loss will be. But with a falling wedge pattern, you're looking for upside, because that's where the explosive nature will come from it, which is why I like this setup, because it's getting tighter and tighter. The days are actually getting tighter as well. So you can see big moves on these days, bigger candles basically, and then lots of smaller candles, which makes me believe perhaps there might be a move coming. Hopefully it's the upside, but of course if it's the downside, that's trading. I'm looking forward to seeing how this one performs.
Interesting. Okay, no, I think this is looking very interesting. And I was just looking at the options. If you like selling options, decent, I would say 50-60%. So you will get decent premiums as well. And since the Yeah, so go ahead.
I'm sure a lot of folks the options chain now.
Exactly. So seems like it, but the only key with Rubrik is that they only have monthly options chain. So you will have to hold it through for the month. So
Wow.
might not be for it definitely cannot be a big part of your trading portfolio. Like a 50%, you're trading with stuck with this. This I'm not sure if you can hear the baby crying behind the scene, but it's like
No, can't hear it.
it's good because he's really loud today.
No, I mean, we've invested in good audio technology, so we're all good for now. Anyway, yeah, so that's my chart of the week, and hopefully I'll get another notch under my belt in the past performance. Move on to the next one. We've got Kaye's pick of the week, which I believe is SoFi.
It is SoFi. So finally, it's been a while since actually I talked about SoFi, and interestingly, this trade. First, let's talk about the earnings. One of the things key criteria for SoFi that they have never missed their revenue guidance. It's always beaten revenue guidance. From an EPS standpoint, there has been few misses and there have been some inline. So pretty much as you can think about it, the company tends to do with earnings report, right? There are very few surprises unless external factors play into the role. For example, when COVID happened and they stopped the student loan forgiveness program started, those kind of things, external factors which the company cannot control. In general, the company does very well with the earnings guidance. So this earnings, which is coming up on Tuesday, the revenue is expected to be about 804 million, EPS about 0.06. So as you can see, slowly climbing up to that $1 billion mark from a revenue generation. So once they hit the 1 billion, you'll be looking at a company that brings 4 billion a year in revenue. Now the actual move generally is about $2.30. Some will say $2.20, some will say $2.25, depends, but let's say $2.30. And those are the two yellow markers that we have on the chart as well. So that's the kind of the range that you will expect the SoFi stock to be in. Now, interestingly, I am going to play a bearish move on this one. So I'm expecting the stock, and the reason for that is because the stock actually has moved very violently in the recent days or recent weeks, I would say. And I'm expecting that they have actually already priced from the earnings.
You think?
I think. And that's why my trade on is to actually get the stock at these levels. Now, again, it could break up, but that's not a problem because I generally have multiple different trades on SoFi. So if it goes up, my other trade is going to benefit from it. But for the binary event, because you have to choose a condor where it doesn't go out beyond those levels. But using, like, for Tesla, I was more bullish. It did not play out that way. This time I'm a little more on SoFi. Similarly, because we have the trend of SoFi will report good earnings and it will be a sell-off. So it's not like I am choosing anything very extraordinary. It's standard. It's pretty much in line. Of course, I could be wrong because 50% chance I'll be wrong. But that's the trend. I'm assuming it stays with the trend where we will see a sell-off right after reporting earnings. That's why I'm playing the sell-off.
Sure, SoFi, that's interesting. Would there be a level that if you did get the correct movement and you obviously got the short, maybe it goes down 9-10%, would there be a level that you're looking to buy for your long-term positions?
Yeah, like
Or
I prefer the $15. That's where my puts are.
still here?
Yeah, that's where I sell puts at $15, and that trade is I'm up 95% on that trade. So
So
if it does pull back, some of the gains from that trade will erode because it's getting closer to your strike price. If it breaks out to the upside, that trade I will be able to close completely with a 97-98% profit because I still have that trade open until September, I think mid-September. So I will be able to close that trade early with almost full profit.
Awesome.
And if you don't know what I'm talking about, you can check out my X profile. I generally post those results often.
Yeah, and that's the InvestK handle that you can see on the screen there just by his face. But yeah, we do. I mean, from my perspective, I wouldn't be trading this going into earnings at all, not to the long, not to the short, just because it's in this it's a tricky area. I mean, SoFi earnings in the past have always got me. I mean, this is an earnings report here. It's come up on the news report on the open and come back straight back down on the day after. So it's very volatile. But I guess if you can play it to your strengths, then fantastic. What I'd be looking at is actually this kind of 50 moving average area. If it was to come back down, I mean, it's probably not going to happen overnight. Maybe if you get kind of how do I say that, kind of mundane earnings, and then it kind of dribbles down afterwards, then maybe the 50 or even the 200 there would be good to kind of add to long-term positions. But yeah, I wouldn't be trading this going into earnings, unlike yourself. But I do wish you the best of luck because you need it for our competition.
I definitely need it based on the scorecard, right?
Yeah, so that awesome. So there are our picks for the week. I'm long RBRK and you're short SoFi. Also, look at the RSI here as well, kind of pointing downwards. So maybe a little bit of extra legway to the upside. Who knows?
Yeah. Look, I mean, the way I'm positioning myself is, one, I have a long-term trade that will benefit from the upside, and then in that case, I'm just pairing it up with shorting the stock right after earnings to benefit me if we see a reversal. So you're kind of playing both sides, but again, the previous trade, I cannot count it as an earnings trade. That has been in play for a long time.
Exactly. All right, let's move on to the next slide, and this is where we talk about what we do, what we offer, and kind of when we do it. So for me, obviously, X is a big one. I post daily insights around kind of trades that I'm taking, kind of thoughts and charts, etc., and of course, just kind of general psychological tips as well. So if you check kind of thing, it's actual. And the same as well for YouTube, which I do post there kind of once or twice a month. It's all evergreen content. It's all kind of trade knowledge, psychology as well. So there's nothing in terms of charts and things like that because I keep that to X. And of course, I've got Substack as well, which I never post to, so don't bother subscribing to that. Just before we jump into what Kaye's got, obviously make sure you follow All Financial as well on X. A big powerhouse in the financial industry. If you're probably already watching on the channel, but definitely give him a follow. He's got great knowledge on kind of the industry as a whole. So, Kaye, what have you got for us this week?
As you can say, you can pretty much follow me on X, where I do post often as much as time allows, but I do post my trade results over there as well, which are public trades. YouTube, I haven't been really posting a lot lately, but I think my schedule is going to free up a little bit, so you will start to see me getting more active on YouTube, which usually I do stock analysis and stuff like that. And then, of course, Substack is my weekly Substack where I do post the earnings trade that I'll take. Now, of course, there are other earnings trade that I'll take apart from the SoFi that I just mentioned here. So if you like it, definitely give it a shot. Subscribe to the Substack channel as well.
Awesome. Right, we'll jump into some charts in a minute. We didn't have many requests this week, of course, with the time change, but we did get a nice hello from Rajat. So hello. I know I'm a bit late, but sometimes when you bring up the comment, it blocks our faces. So I thought I'd wait to this point to do that. So that's why I did that. Awesome. Right, let's just jump into the charts.
Okay, so the first one is the one was IX. What is that? IXHL. I think it's something to do with healthcare, but let me double check. Yeah, it is a healthcare. And in healthcare, what do they do? Okay, Net and Lulu, yes. Both are my favorite tickers. So this company, Incanex Healthcare, is a clinical stage biopharmaceutical company, engages in the research, development, manufacture, sale, and distribution of psychedelic medicine. I have no idea what it means. And therapies for patients with chronic disease in Australia. So this is an Australian company.
Look at the stock price. Ooh, $1. It's actually moved magnificently just in the last week. So Monday it went from 86 to 82. Tuesday opened at 75, ended at 82, so it's a 10% swing. And then Wednesday 84 to 99, which is about 20%. And then you've got Thursday up here. Oh, yeah, I mean, this stock's all over the place. I mean, fantastic if you made money off of it, if you bought down here somewhere. But if it does have, let's get the comment up as well, because Kukaz had made a comment here with the imminent phase 2 results. I mean, anything with increased phases is a good thing, but you can't really rely on that with these stocks because you just get, if it doesn't get those results, then it's got to go back down to kind of 40, 30 cents, isn't it? I mean, essentially. And then from here, that's 50%. So you don't want to lose that, especially if you're trading with leverage. So that's why I kind of stay away from these biotech stocks. It's just you might get lucky once or twice, but generally you kind of get burnt in my experience anyway. Maybe I'm just not very good at trading them. I don't know. You don't trade bio stocks, do you?
No.
No.
I just, my trading style is not suited for these kind of plays. Let's
No, I
put
mean,
it.
mine kind of is with the breakouts, but I mean, have to be very specific with the breakouts. Maybe I should look into that.
Yeah.
Going ahead, maybe not with this stock, but maybe I should look into that in the future. Okay. So hopefully we've covered it okay there for you, Q Casmid. We'll take a look at Oklo as well, perhaps, because that was our second question.
Second comment. So while you pull up the Oklo chart, so he or she says, Oklo has moved quite significantly since the end of last year. Will it replicate other nuclear stocks that have done well? I mean,
it's done pretty well.
The stock is already year to date has given you 255%. So
Exactly. It's doing well generally as well. So you can see the chart, higher highs, higher lows. I'm actually in this as well, so I'm very happy with how the performance is going. I took half of my position at 68, and I'm letting the other half run. It's currently at 75. I'm down here at 54. So I'm very pleased with that. I should probably bring up the stop loss thinking about it. Yeah, I need to do that. I have to write that down.
Just so you guys know, I'm just looking at this. They bring $0 in revenue.
Yeah, I'm just playing from the chart. I'm not doing anything company wise.
That's $11 billion market cap. Great. I mean,
yeah, it's one of those stocks that's kind of dominates FinTwit. So you just kind of run with it essentially. I mean, what's the volume like? Let's have a look. So the volume you can see on the screen there, it's kind of normal. There's nothing exceptional. It increased here back in May, but yeah, just kind of rolling with the position. I take it you don't trade Oklo much then.
I mean, I know it's on my radar because a lot of people talked about it, but again, this is more of a pick and shovel play to the semiconductor and hyperscalers. And I know a lot of people, and I personally like pick and shovel play as well, but I think this is a little bit too much of a pick and shovel for me.
There is a bit of a scenario here to play out. So if you are looking, because one of my strategies is obviously a breakout trade. So if you've kind of broken out from this line of 68, we've come up here. You could look for a bit of a retest down at 68 as well, that kind of 67, 68 area, and obviously go up to higher highs. So don't be surprised if this comes back to 68 anytime soon. And it kind of did intraday on Thursday, but I'm looking a bit more for a longer move.
I mean, imagine those folks who probably got into Oklo last year. They have already made almost 8x on their investment, like 800%, 797.74% in 1 year. It was a $9 stock in start July of 2024.
Yeah, incredible, isn't it? It's just one of those that you kind of have in your portfolio in a very small position until it blows up.
Yeah. But the question really comes is, do you want to get in at these levels and still expect a 300% return?
I mean, it's very unlikely. To expect it is very unlikely. It could still happen.
It's already run up 800%. It's not like, it's run up 50, 60%. It's 800% it has run in 1 year. Can it replicate another 100%, another 800%? It looks highly unlikely.
But it is possible.
Yeah. So, but in trading, it's also about probability.
Yeah.
Right? It's if you have a stock that has already, so for example, let's say, we'll give you an example, Palantir, right?
Yeah.
Trade is starting by like 150, 160 it's trading at. It could go to 200, but can it run to $1,000 from here without having a pullback?
Yeah, I mean, like you said, it's about probabilities, isn't it? And the probability is probably about 90% no. But again, we're not experts. But I mean, even Enphase back in the day.
Here's the point. Nobody's an expert in price prediction.
No.
So my opinion is as valuable as your opinion or somebody who's watching there, right? Because you will get things right and you will get things wrong. So anybody on FinTwit or CNBC or anybody who just predicts a price, listen, give you an example. Gene Munster, who is supposedly, he runs his own, equity firm where, people invest money. He has been calling Google, the search has dead from last 2 quarters. And he changed his tune this time around because Google search is continue to grow. That's what I'm saying, right? Everybody will get things wrong. But again, it's all about probability.
That's the market, isn't it?
Exactly.
Everyone is wrong.
Everyone is wrong. So listen, I could pick a stock and that might just give you a 1000x return, and then the next stock I pick gives you, you go into debt.
Yeah, not with the right risk management though.
Exactly. That's on you if you don't do risk management. But I'm just saying that these things happen though.
They do. Right, we'll move on from Oclo. We've covered quite nicely on that. A few lessons as well in there as well. So if you make sure you rewind and get them again. What's next then? Is it Net?
Next, Net, yes. Net is this is a monster of a stock. Not a lot of people talk about this stock. Cloudflare is and the funny part is, because even though I know it's a monster of a stock, I always end up missing building out a position in this one because I'm stuck with GitLab. That's the problem.
So I think it's worth a mention here for Man Ram, who consistently comes back week after week. So we do thank you very, very much for not only coming back every week, but also getting involved with the comments as well, and obviously suggesting charts that you might want some thoughts on. So yeah, thank you once again. We're looking forward to covering Net and Lulu. This is obviously Net. Kaye mentioned it slightly there. It says plug in a little bit higher, isn't it?
It is. And the earning expectation is you do have 14 down revisions on this one. So they expect the EPS to go down. Let's see.
All-time highs? Oh, no, not quite. So we do have all-time highs coming up at 221. So there is a move potentially there. That's about 10%. If we break out of this small consolidation pattern that we've got. I'm now on the weekly chart here for people watching. And we've got, let's have a look at the info line. So from here to there. When is the earnings, did you say, sorry?
It is on Wednesday, I believe.
Okay.
7:31. Yeah, 7:31.
Okay, it's a bit risky kind of taking that trade going into earnings then. But it is possible. I mean, if you wanted basically a 1-for-1 risk toward ratio, it's very binary and it's quite risky. You could essentially have a position starting kind of here at the breakout level, going to all-time highs, and then the stop loss just below the most recent low. So that's basically a 1-for-1 loss ratio. But that's a 50-50 chance of winning or losing. So that is a scenario that could happen. I probably won't play it myself because it's not really what I do with my strategy and kind of risk appetite. But I'm sure there'll be a few people looking at that going into the week ahead for sure.
Yeah.
You playing this earnings? I know you like
not on Net. But it's on my radar for a long-term position. I haven't initiated one though. I keep missing it because when it dropped, when it was in April, I could would have done that. I missed it.
And we covered that, I think, a few months ago in March, April, because that's why I've drawn this box here.
Yeah.
So that's obviously an area of interest for us back in the day. Did we capitalize on it? No, we probably didn't. I am in the ETF, which is the kind of cybersecurity ETF. So it's part of that, but not completely directly. So I guess I do have some exposure into that area. We do have a comment here from FinXL, which again, another regular viewer. Stop loss is there for a reason. Absolutely 100%. Right. Yeah.
But you'll be surprised to know that a lot of people who take trades don't actually know how to use a stop loss, or don't even put a stop loss.
Can you put this might be a silly question. I don't trade options that much. Can you put a stop loss into option trades? Yeah. Obviously, I'm a shares trader, so generally that's what I do. We've got another comment here from FinXL as well. The monthly candlesticks tell a bullish story for me. So let's have a look at the monthly candle. Always good to have a bit of a zoom out. We don't zoom out too much on these live streams just because we don't want to spend too much time on each ticker. I'm guessing today is a bit more of an exception.
Today is a different day, so we can take our time.
Let's get rid of that so we can see. Get rid of that so we can see. Yes, now that is a very good candle. It could also be completely ruined by the earnings on Thursday because that is the last day of the month. So we'll see what happens on Friday morning when it's the start of the next month. If it's as bullish as this, then I think we're going to all-time highs And like I said, you can keep a stop loss somewhere down here, 170-ish. Yeah, no, I do like net, even if it's just for a short-term trade.
But we got two more tickers, so let's go with Lulu next, and then today I feel like all the tickers. I love these tickers.
They're playing to your strengths here,
Oh
okay?
yeah, I love it. Okay, Lulu, very
Oh,
very
look at
very
that.
interesting spot, right? This stock is has been hammered, and it has created a lot of gaps. If you notice, right? On if you look at the daily, while you pull it up, we have the first gap which was created during March of 2024.
Oh, March 24. We're going back.
Right, that was the drop from there. Then most recently, this
Oh,
drop
yeah, that one there.
around June.
I've already drawn it. There you go. So,
Yeah, exactly.
and another one here, yeah.
So now it's really depends on your narrative on Lululemon, right? I have a different narrative. A lot of people are, on FinTwit or other places. They're not a big fan of Nike as well, but it will be a turnaround story. You like it or you're not. It's going to happen. Same thing is going to happen.
Is it though? Is it? Because there's lots of other
Turning
different
around on Nike,
brands
right?
coming up. Oh, are you talking about Nike's turning around or Lulu's
Yeah.
turning around?
If you look at Nike's chart, right?
Nike, I believe, yeah.
But why not Lululemon?
Because I don't think it's as strong as Nike. I don't think it has as much of a following.
Oh my God! But they have a much bigger and a much stickier user base as opposed to Nike. Now, keep in mind that there are other newer brands which are not public companies, for example, Vuori or Athletica and all those companies which are doing pretty well with Lululemon customers. But again, Lululemon is a pretty big player in the field. Now, in the shoes category, I think their shoes did not do very well. But I think again, my opinion, I'm into Lululemon, so I could be biased, but from what I see from the customer base, I think it's a pretty sticky customers for
Yeah, I just think that Nike have pretty stickier customers. That's a thing because then you've got the football jerseys, all the kind of basketball and all that. They're sponsored by Nike, so they get more exposure. You just see Nike more, I guess. I don't know.
Yeah,
I see
but
it more in
they
premium
also said
investment.
that Nike, right? But Nike is mainly, the big business in Nike is on the shoe side, and they had the same narrative, right? You have the, what are the brands? The one is a Swiss company On Shoes, right? They are taking, Hoka
Yeah,
is taking their, right. So again, you have these newer brands, not newer brands, but newer companies taking into biting into Nike. Plus Nike has a very stale, I mean, they did a lot of wrong moves, I would say, during the pandemic, where they tried to remove their middlemen by going straight to the consumers, but it does not play out. And when people started going back to the stores, they were not able to pivot fast enough. Plus, their lineup has been stale. I think same thing Lululemon is going through. Is it going to be a turnaround story right away? I don't know. Nobody can predict that, but I think Lululemon is still a pretty strong bet for me. That's my take.
so from a weekly point of view, I mean, not much is going on apart from just lower lows at the moment. So you would need to see, as from a technical point of view, you'd need to see probably a higher
Yeah.
low going into a major moving average to really test that. I wouldn't be maybe for the long term investment if I like the company as much as like you do, of course. I'd maybe add it for the longer term, but it doesn't appeal for me on the trading side of things, at least.
Yeah.
All right, should we move on to the next one?
Yep. Next is Snow.
Snowflake. Another one of your companies, another SaaS company. So
Another one of my companies, and it is, if you can go back to my YouTube channel, this is part of my top 5 stocks for the year. So let's see, year to date, this has returned you 42%. So if you would have bought this in the beginning of the year, you would be up 42% handsomely on the stock. Now, keep in mind, they did create a gap up. So I always look at those gaps. And I know you always say that not all gaps will be filled, but most do. So that gap is a 16% downside.
you've got 3 gaps here as well. You've got this gap,
Yes, that's the one I'm talking about.
and then this gap here.
Yeah.
Just trying to draw these as quickly as possible, and then this gap down here as well.
Yeah.
I'm not saying it's going to come down right down there. I mean,
Yeah, I mean the first drop is
place,
16%. Anything after that is just it's just going to be that will be only for two reasons. One is the company has done something horribly wrong. Second, the market has completely taken a 180 turn. But the 16%, I can expect that can be a pullback based on just the earnings, for example.
Yes, and earnings are on the 20th of August, which is that line here you see on the screen, and the vertical line. So just around the corner, are you suggesting maybe people wait for the earnings results and see what happens for the future guidance? The SaaS companies at the moment are a little bit sticky, aren't they?
Yeah, I think that, again, for the whole narrative on SaaS companies, how they are going to use AI. I mean, most of the SaaS softwares or products basically have some sort of AI exposure to it. The question is, are they able to monetize their the AI features within the product? And I think most of the companies will be answering that question in one way or the other. So if they can get that exposure and they can get the monetization going for their for the AI features, I think that's what the second inning of AI revolution will be. The first is, of course, the build out that is happening with the hyperscalers and the chips and the ASMLs of the world. Then you have the actual application of AI within enterprise or within consumers.
Obviously, what the comments are like on the earnings report, and likewise, lots of SaaS companies as well. Keep an eye on that if that's an interesting industry that you're following. Right, let's move on to the next one, which I think is also
CRM,
SaaS.
Salesforce.
Have you noticed how my laptop is actually doing okay today? Wow, this is
let's not jinx it.
very refreshing. I did restart it before coming on, so maybe it's a bit fresher. CRM, we have Salesforce here. Obviously, kind of technically, it's below what moving averages, at least on the daily. Maybe we jump into the weekly first and take a bit more of a longer stance. Yeah, I mean, it's looking like the 200 moving average is very, very solid for the weekly chart. 1, 2, 3, 4 bounces in the last year. Yeah, year about. So, I mean, from a trading point of view, I'll probably stay away from it just for now. I'd have to do a lot more research into that. But I think you might want to talk a little bit more about the actual company itself, no?
Yeah. So again, it's a behemoth monster company, in a SaaS space. If you have your long-term position that you're building out, see the stock is trading below its 300-day SMA. So that is just one of the flags that triggers to buy the stock. Now, but you really have to get into it. I personally am not into CRM as much because I've used CRM. I'm not a big fan of the software, but again, I'm biased, so I might not do the right assessment on this. But again, companies love CRM softwares. They just keep buying new products. They keep integrating those, and they're just expanding. Just like what's the other company, ServiceNow. These companies, the strategy has really changed, right? Instead of offering just one piece of work, they have expanded into other areas and they integrate that to their main segment of the software, and that's really helping them kind of take over smaller players and completely like get into a customer and spread, like, what's that word, I forget the word, but kind of spread their tentacles in different departments. So a CRM software could be found. IT teams don't use that much, but pretty much every other team can use CRM products, from a project management to the typical sales team, marketing teams, finance team. They just love using the software. From a long-term perspective, I think if you are looking to build on it, below 300-day SMA is one of my personal favorites that I keep adding the stocks at 300-day SMA. Below that, earnings is going to be a month out, so you might want to watch that. But we do have 36 up revision, so same concept applies here. Will Salesforce be able to monetize their AI investment? If yes, you will see the stock pop up and bounce.
Yeah, I mean, it's a hard one to chart on the daily chart. I've kind of been messing around with a few lines while you were talking about the company there. But from a weekly point of view, it's a bit easier to chart, of course, because you've got solid, less candles to play with. And it looks like it might just be breaking out from that area. You saw it a little bit on the daily when I was having a play, but it looks like it might just be breaking out of that kind of downtrend, should we say, in the last since the turn of the year, and that's price action since December. Just seeing it poke out, so it could be an interesting trade actually. Now, I don't normally say this about SaaS stocks. We've got lots of volume here on the right side, as you can see. I wonder where the moving averages are for the weekly. They are above it, which isn't great, but it's not everything. You don't have to have all of the technical indicators on there. So just be wary of that. But I mean, essentially, if you were going to get a trade, it'd be a stop loss around 250, which is obviously just below these recent lows. We'll get rid of that for now, and pop that in there. So you could play that, and that potentially here, if you are going to go to the upside, is you've got 6% risk to the downside, and if you're going to go to maybe here, because you've got contact point here, I'm at 315, and resistance over here as well, and that's 17% to the upside. So that could be a first take profit point. I kind of waffled there a little bit, so I think that made sense.
Yeah,
but that'd be a longer term swing trade. You're probably looking beyond earnings as well. Take it through earnings and beyond.
And I'm
interested in that.
I just have one additional point to make. If you actually zoom out a little bit more, on the long term, so you see this last high that they made back in 2024 March. So right before this one, and then they had a pullback of about 30% to the downside. Yeah, exactly. And then they ran up again. So if this is the same pattern that is playing, then you might see another all-time high while you're accumulating stocks at the 30% discount.
So you could be, I mean, Uber is doing something like this as well. So you could have an expanding channel, which you've got obviously lows, as you mentioned, down here, and we drag this out. So you're almost looking at something up here, maybe sort of $400 mark, which is 50% move away. Now, of course, you're looking at a lot of time for this to play out because this is the weekly chart. This is not the daily chart. So you're probably looking at maybe another 6 months or so for this potentially to play out. You've got 2 or 3 quarters of data to come out as well in that time.
Exactly.
So it's not going to be a very simple move, but that's the pattern you're kind of pointing out. Am I correct there, Kaye?
Yeah. And this is more from, because I kind of mix the investing aspect into it. This is more of your long-term plays that you really make money on, not the short-term trades where we are targeting 20%, 15%, 30%, quick turnaround on breakouts. This is like a long-term play. These are some names that, are pretty sold off or oversold territory, and you can really make money on these.
That's interesting. I wonder where the RSI actually is. It's kind of in the middle, nothing there.
Yeah.
But the MACD actually looks quite appetizing. This has come back round to the upside.
But again, this is going to be a long-term play. So you're looking at multiple quarters for this to play out. If you look at the entire channel, right? Yeah.
Long-term swing / almost long-term position.
Yeah, it is a long-term position, no doubt about it. All right, move on to the next one. Next is GEO. I don't know what this does, but let's see.
So we're on to the last 2 stocks of the day. Then we have to obviously end the streams because we're coming up to the hour mark, which has been really quickly today. I think it's been really fun.
Because we took a long time on each ticker today. So let's talk about GEO. So it's a Geodrill. They own, lease, operate, and manage secure facilities, processing centers, and community-based re-entry facility in US, Australia, UK, and South Africa. So security and alarm services industry. Interesting.
Is it a REIT?
No.
So I've got REITs here. Real estate.
So it provides secure facility management services. So yes, including the provision of security, administrative, rehabilitation, education, and food services, re-entry services such as temporary housing, programming, employment assistance, and other services, electronic monitoring and supervision services, and secure transportation services, as well as design, constructs, and finances new facilities through projects. So it seems like they do a lot of stuff.
Yeah. From a technical point of view, it looks quite exciting. Got increased volume in the last few days. And obviously a really nice candle on Friday, coming up to...
Oh, it's a private prison. It's a private prison. Okay, no wonder.
Have you seen those prisons? A bit off subject, not quite, but it's in those prisons in Norway. They're great.
No.
Yeah, they get really good treatment there, which is a bit odd, but
So you want to be a criminal in Norway?
Yeah, apparently. So yeah, in terms of a technical point of view, as I was mentioning, we've got lots of volume coming up through here. But if you can get through 27, this most recent high, that would both break the trend line that we've got on the screen here and break that most recent high, away from all the moving averages. Yeah, this looks really good for a breakout, to be honest. I'll be keeping an eye on this one this week. So thank you to Money Manage who brought that one up.
And Angela says Geo is for-profit prison, so unethical.
Yes. Okay. So maybe if you're looking more towards a more ethical portfolio, then perhaps not.
Okay. Next one is Datadog, another company. Yeah. If you remember, this was
Whoa. So yeah, I just remember where it was.
Let me before you jump on a technical aspect. If you remember when they did this breach of the long-term trend line, and I said, "Hey, this stock is going down to $100." I remember there was somebody in your tweet. They were like, "Oh, this is just a one trend break. It cannot be the case." Look, where did it go down? It went all the way to the 80s.
Yeah, incredible run. It's done a similar move to AMD, come down to the 80s and back up to 150. So.
Yeah, exactly. Now, I think if you are going to be buying SaaS software, you need to really understand their business model. And if you actually go and study Datadog as a company, you will start to realize they are following the same playbook as CRM, as ServiceNow, as other software companies like Monday. So basically, when they launched their software, that was tackling one specific area, one specific use case. And then over time, what they are trying to realize is that they can actually take more market share and the more market within the company, within the enterprise itself, by kind of expanding on their existing product or by doing an M&A like CRM does. So this is the pattern that you're seeing. These companies are really becoming bigger and bigger and bigger in size by taking on products that are similar to what they initially launched, or completely buying something off the shelf from a different company, like CRM does often, and they put it and merge it with their existing product. So basically, what they're saying is that you buy our product and you do not have to go to another vendor. You can just use this module and this module and this module and pay for it. So that's what I'm trying to get at. So if you get into these companies, you should definitely look into the product offering and how they're expanding.
So understand the company basically if you're going to invest in them.
Correct.
Yeah. As we should be doing with every company, not just SaaS companies. You should understand what you're investing in, especially for the longer term. If it's just a trade and you're basing it off technicals, like I do a lot of that, then yeah, we'll see. So going to technicals then, after that, I mean, we are kind of within a wedge, a very extreme trend line to the upside. So that will probably be broken at some point, maybe at the resistance here. So if we keep plugging up towards 154-ish, I'll be looking for a break to the downside back to this 135 line, which would be roughly 10%, which is okay. But I don't really need to trade these kind of companies. And that's definitely more your ballpark, and I respect that. Yeah.
887 is the report earnings.
87, that is this vertical line here. So
yeah,
right at the corner of this trend line. The wedge.
Yeah.
Interesting things for Datadog there. I'm sure a few people might have written that one down. If you did, then give us your thoughts in the comments below. But with that, that'll be the end of this session. We had a good discussion today, I think, on the SpineQQ, the kind of market outlook. Obviously, lots of earnings this week as well, so make sure you be careful with your positions. Don't get too emotional. Make sure you stay rigid. Have the correct risk management in place, and also just trade safe. It's very easy to get carried away in earnings, isn't it, Kaye? It's a tricky one, earnings. I know you like it a bit more than I do. I used to like it back in the day, but it's not for me anymore. Not for me anymore.
You know, the funny part about earning trade is that, and the key is to actually really manage your risk in terms of allocation, right?
It's hard because you think, you know what you're going to lose on most trades, but obviously with earnings, you don't. It can go down 5% that you expect, or it can go down 50% if your market outlook is really, really poor. And that's when you start losing accounts, things like that. So it's a tricky balance to have. But of course, like as you said, If you keep a smaller position in your portfolio, just keep it a bit fun, I guess, then it's not too bad. But yeah, no, thank you for everyone who joined in and said the comments. We've got Finn Excel, Manram, Rajat Sonny joined in, obviously Money Manage as well, amongst others. So keep coming back every week. Next week should be back at the normal time of 1 p.m. Eastern time, not 11 a.m. Eastern time like it was this week. So yeah, once again, thank you for kind of joining kind of a different time this week. I want to stop waffling a little bit, but thank you massively to obviously Wolf Financial for letting us use the platform. We really, really appreciate it. And now, Kaye, I'm going to give it over to you to kind of finish off the stream and send us into next week.
Well, all I'll say is you have pretty much hit all the points, and I wish everybody, stay safe, enjoy trading. Remember, it's a binary trade, always earnings trade. So if you are into it, keep your portfolio risk to a minimum and basically keep enjoying these trading.
Yeah, I mean, we're at all-time highs. It's a very frothy market, and we can enjoy everything that we're in. As Kaye mentioned there, I think it's important to kind of enjoy these times because we've all been through it. 2021, 2022, it wasn't a fun time. So it's all part of it, of course. But yeah, no.
And we just final comment from Verla. Oh no, I'm late. Don't worry, you can always rewatch this on the YouTube channel. We did cover a lot of interesting tickers this time around, so definitely go back and watch it.
Another one that comes back week after week. But yeah, you can go back on the YouTube channel, as Kaye mentioned there, which I did have the thing up there. There we go. So at Trading Weekly, not Trading Triangle anymore. We are Trading Weekly. And with that, we'll send you into next